Welcome back to Full Disclosures Regulation Rundown. This week we have Brian Vieaux, president of MISMO, with us. And there are a few things happening here while we're in Vegas for MBA Annual and a couple big ones. So I have two great CEOs with me who can both answer my questions. So let's talk the shutdown, right? It's been going on for a minute. It's still happening. When we wrote this question, we actually put at the beginning, if it's still happening. Yep. You've both kind of been through some shutdowns. They've happened a few times. What are some of the most valuable things that lenders can do during a shutdown to protect their business and prepare for the future?
Yeah, I think as we record, what are we on? 13, 14?
13, 14,
something like that. Yeah. So I know last week when I saw it was the fourth longest. It's probably crept into the top two now.
We're in a long one.
Yeah. And I don't know that there's an end in sight.
Yeah. Unfortunately, I think TSA going home is going to be an interesting journey.
It was a little dicey getting here, but we made it. So I always think of any kind of impact for lenders, they should be thinking about the consumer first.
Mm-hmm.
And so if you're a consumer, we're all consumers, and you're a home buyer, it's not like you're not aware of the shutdown. Mm-hmm. So first of all, it's people are well aware of it. I think when I think about, good loan officers versus those that kind of stumble along, the best loan officers over communicate and they set clear objections. Mm-hmm. And so every conversation I have with a borrower as a loan officer today, I would be level setting. Clearly you're aware we're in a government shutdown. There are aspects of the business and this process in particular that could be impacted by the shutdown. As an example, if you purchase a property and it needs flood insurance, that could be a problem. We may not be able to fund your loan, until the NFIP is accessible again. So that's one example. So I think most lenders can kind of navigate this from a consumer perspective by setting clear objectives. There's not aware of too many lenders that are going to be willing to go out on a limb and fund loans that need flood insurance without
flood insurance. Yeah.
Big risk. And we've seen the impact of catastrophic events and not having insurance, what that does. So, so to me, it's all about communication.
Yeah. And I like that, and kind of framing these things as an opportunity to stay in touch with your borrowers and reach out to other people too, and continue to that, and kind of act as if it's not going to change. Right? Act as if the world's going to keep spinning, right? Like the shutdown will be over at one point and then everything's back to normal. So how can you use this as an opportunity? Right. So we see that in other areas of our business when we're onboarding a client and things are rocky in the beginning, like, great, this is a chance to show our customer service. That's right. Get a problem, fix it, and then people realize that and they stay with you. Right. So I think, to your point, being able to see that, and things feel like a little bit of a holding pattern now, but we've had so much change so fast that 2 weeks of breathing room feels like a month.
That's right.
Yeah, absolutely. And the other big thing in the news right now is people are kind of comparing the OB Optimal Blue antitrust suit to the real estate commission suits. What's your take on the situation, and how do suits like this change the culture of our industry?
I mean, I think it's apples to oranges in the sense that, in the NAR case, we're talking about big numbers when you talk about real estate commission and, somebody, being responsible for 6% versus 5% versus 4%. So you're talking about hundreds of basis points in that case. I don't know about you guys, but what I'm seeing in this OB thing is like handfuls of basis points, like, couple bucks a month in payment difference, like not significant. So I think the burden is going to be tougher
to prove
that there's like this hardship that was created, because the financial impact for a particular consumer is so small in this case.
There is some pretty realistic competition and product and pricing engines, even with OB, is like the lead. It's not like there's an alternative to NAR.
That's right.
So like, you look at like folks on Encompass, right? Like they have their in-house tool. Like there are a lot of people that use other pricing engines. So there's some sort of, competition and opportunity for folks to pick different options in a way that doesn't really exist, comparing like a realtor to buying and selling a house by yourself.
Yeah. I mean, one thing that would be fascinating for someone to kind of counter this, argue this, would be for the lenders that leverage pricing engines to find the best price among their investors for their borrowers. What would those consumers be impacted if they didn't have that mechanism to do that?
Right.
Yeah.
I would argue that more consumers would be negatively impacted in a bigger way if lenders didn't have access to a tool to assess the landscape of investors to sell loans to.
Yeah.
Absolutely.
I mean, NAR would probably make a similar
Sure,
argument to not
of course.
having a realtor in a transaction, but
And you guys were much faster answering my question, so I'm going to throw one
Oh,
at you that I
bonus.
didn't prep you with.
I can throw out a regulation one too.
Okay. Well, so looking into next year, the current administration would like to see some new blood in the Fed. It's a big talking point. So I believe some
I think they'd like to see blood from the current Fed too.
Oh, head on a spike. Yeah.
Well, with Powell still squarely in place and mortgage rates moving just a little bit, what do you think lenders can expect to come in the months ahead with our lovely Fed department?
Sadly, I missed the MBA's economic.
Good. I caught about the first half of it.
So I know they've been kind of projecting some near term to longer term, gradual drops in rates. Is that still the case?
I didn't see the Mike Frantoni part of it because they were interviewing Gary Cohn and Larry Summers, which was interesting. Larry Summers did say he doesn't expect a recession in the next 9 months, and they were pretty understanding of the challenge that the Fed has, and they said between inflation and unemployment, these are two dual mandate, and right now the Fed is focusing on unemployment more so than inflation, and Gary Cohn seemed to think that was the right problem to solve first. So I don't know what that means in terms of reductions, and they kind of see the data that is now conflicting predicted that eventually things are going to fall in line. Which way does that look like?
Yeah, just anecdotally talking to industry folks and people that are kind of on the street, most people are expecting kind of higher for longer, with maybe some subtle. I don't think we're going to see these crazy drops.
Do you think we're going to see 6? Everyone, this seems to be the magic number is 6.
I
mean, I think probably sometime in late Q1 maybe.
2026.
Right.
6 for 2026. We have to have something. And Jim, I know you had a question, so go for it.
Yeah, one of the things, so in listening to MBA, I mean, they kind of took a victory lap on trigger leads.
As they should. It's a good win.
Now looking at GSE reform, and what does that look like? What's the best case scenario there for you? Or worst, whichever one you
I think they were never meant to be in conservatorship forever, right? So that is going to get unwound one way or another.
Yeah.
It's kind of clear what the current administration's preference would be in doing that. I think there's still a lot of unknown. In my mind, there's a lot of unknowns around what does it look like if the GSEs were removed from conservatorship and more of it was sold publicly. What does that do for the backstop? Do we have a risk there that we lose this backstop where I mean, this U.S. real estate business is built on the fact that we have the GSEs as a liquidity source, and absent them in the existing model, I don't know that there's not too many banks that are going to step up at scale.
Not at
not that level.
2/3 of all mortgages.
Yeah. And I mean, I was at Housing Wire's Mortgage Banking Summit, and they had both actually CHLA and the MBA both came on to talk about the GSE reform. And I think they both kind of said it in, I think, a pretty good way, which is we want to see them out, but we don't want to see them out hastily.
That's right.
Right. And it needs to be done properly. Right. And I think that's the biggest thing.
The concern of the liquidity in the market. I think, the idea of conflicts of interest of who now owns the GSEs and how can that change.
The most important thing is to maintain the trust that is in Fannie and Freddie to be able to provide these products. And I think if you do anything too risky, you might remove that trust.
Or too rapidly. Because any uncertainty just is going to freeze the market. And we don't need that.
No, absolutely not. Well, thank you for joining us for all of our regulation rundowns.